Hey guys, welcome to this week's podcast episode. I'm really excited about today's guest, Caryn Silvius, and she's a business owner and she dubs herself as a seasoned bookkeeper, which is one of the first guests talking about bookkeeping. And I'm really excited about hearing about the entrepreneurship aspect of it. And she's going to be talking about structuring a business, investment tracking, creative ways to track investments, and how to become more profitable in business. So, Caryn, welcome.
Hi, thank you.
Yeah, I know we had connected through Podmatch, and so tell people about your story, your background, and how you got started.
Yeah, absolutely. It's a long one, but I became a bookkeeper when I was probably 18 or 19 years old. Been doing it over 15 years now. Started out at a small mom and pop shop for about 7 years, I want to say. And then I moved to a multi-million-dollar corporation that resold 3D CAD software. It's called SolidWorks. And then 3D engineering, like printing stuff. So I worked with them and I helped them in their accounting department and their sales department. Got involved in that. I was there for about 4 years and then I quit and went to work with my husband, who's in real estate. And just naturally fell back into bookkeeping. I got my license as a realtor, but I only did behind the scenes stuff. I like contracts, my brain. That's what catapulted me into opening my own firm.
Yeah, interesting. And I've really most people that I've talked to, they dub themselves as accountants. But what's interesting is you call yourself a bookkeeper. I mean, what's the rationale? When I hear bookkeeper, I think of a librarian, but I'm just curious. That's
awesome. So I'm not a licensed CPA. So a CPA and an accountant, they're licensed for it. Certified public accountant. I'm just a bookkeeper. So I'm not one that I like to claim that I'm a tax professional. I don't know the IRS code in and out, but I have tax professionals that I partner with in my firm, as well as other CPAs that I work closely with. My role really is I organize the business. So all of your income and all of your expenses, they tell a story to your business. So they kind of tell you what you typically spend your money on and where you can kind of cut some of the fat from your expenses if you're having slower months compared to your normal busy months. So that's my job. I'm the one that's like your right-hand person to tell you, hey, you're overspending in this area. Whereas the accountant's the one who's more like trying to look up how to go around tax codes and really save you money on taxes every year.
I see. Interesting. Yeah. And one thing is talking about this. So this basically a skill, and then basically you're kind of you can apply it to different industries, which looks like you've been successful at. So one thing is, from a bookkeeper standpoint, one thing is what are some of the biggest struggles business owners have?
Oh my gosh, not being involved in their business, not being involved in their finances. My job is not sexy. It's not a fun job. People aren't super pumped to go look at their numbers all the time like I am. So I think that's one of their biggest downfalls. They just go about their day-to-day stuff, whatever they're doing. If they're doing auto repair, they just go about repairing the autos and the cars and whatnot, and they don't focus on the income that's actually coming in compared to the income that's going out, right? And so my job is to kind of make it a little bit fun. And each of my clients is a little bit different, right? Some of them are very I just want the numbers, just tell me what I'm doing. And then some of them want me to fluff it up a little bit and kind of make it interesting so they're not falling asleep. So that's probably my biggest thing is people aren't paying attention to what their numbers are saying. Right now as a real estate, because my niche is real estate people. So anybody in that realm, right? Realtors, transaction coordinators, inspectors, property managers, that kind of stuff. Real estate, if you follow the trends, it's really down right now because interest rates are super high. And so business just isn't moving a lot for them. It's not like it was in 2020 and 2021, right? Where it was they were just skyrocketing. So they're really watching their numbers right now. They're really learning what they're spending their money on. They're really leaning on me to tell them, hey, you're overspending in going out and eating, or, buying client gifts at the end of the day, or whatever the case is, their dues and subscriptions. They've got way too many softwares. You need to cut Adobe out, save some money. So I would say that's their biggest pitfall right now, is really watching their numbers.
Yeah. And one thing is talking about is, which you brought to mind was, most business owners, they basically, let's say, they bring in 1 million in revenue, and it comes to, but basically they get caught up between this idea of cash flow and probability. And, even though they say a business is making $1 million or more a year, at the end of the year, they're broke or they can't pay. What is that from? What's going on there?
Well, it's different for everybody's needs, right? Like I can't really answer that fully, but a lot of the times people just see the money in their bank account and think that's what they can spend, right? And sometimes that's not always true. If you don't have a budget put together and you don't know what you typically spend your money on, then your money could be already allocated somewhere else. And so even though you have this money in your account physically for you to use, like you said, you have $1 million over here, but let's just say 500,000 of it is going to dues and subscriptions, and you go and buy $750,000 worth of new equipment for your business, right? Well, you just overspent by $250,000. Just because you saw the money sitting there doesn't mean it's there for you to use. Yeah. So it's always wise to cash flow and project and kind of see what the last 3 months trends were, to kind of see what the next 3 months are going to look like, so that you can properly plan for those big purchases and stuff. Yeah,
it's quite interesting, because one common thing is, I hear commonly from guests and others is, my business was profitable, my business was profitable, but then they're like, we can't pay this, there were this vendors paying us late, and all these cash flow, or like, just like business owners, they like basically they can't pay themselves, and basically working in the business for free and all of that. You talk about also the importance of structuring a business in terms of, I presume you mean like an LLC, or like, why is structuring a business crucial to creating security for you personally? I'm just here to hear your insights.
Yeah, so depending again on the company's needs, like I actually have a neighbor next to me that was just randomly talking to me about his business. He set it up as a sole proprietor. Now, there's nothing wrong with that, but he also works on automotives, and if he were to get sued because he didn't fix it properly, it's tied to him and his personal stuff. So anything that is his home, his car, they can go after all those assets that he currently owns. So I'm always telling people the best thing to do is to create an LLC for yourself, and that way it protects your personal assets from ever being caught in a lawsuit, right? So if your company gets sued for errors and omissions or whatever, for your business, then they're only coming after those business assets and not your personal stuff. Like myself, I'm actually just talking to my husband. I haven't worked too much into this, so I'm kind of excited, but my husband and I own probably about 4 different businesses together, and we have like an umbrella company, but I want that company earns income. I want to get a holding company and have that holding company own assets to each of my other companies. And that is just another added security feature for myself. That holding company will not earn income. It won't have expenses. It's just earning or holding stock in each of our companies. And that way, if anybody comes and sues us, they're really going to have to try to go down all these layers of protection before they can get to me.
Yeah. And there's also this question of a Nevada. I've always, again, this is not legal advice, but there's always this Delaware versus Nevada. Kind of talk about that.
So I'm looking into Delaware and Nevada myself currently, because I've always been told Wyoming is the best place to go. And Wyoming's really good because you can file all your stuff through a third party, so it's not tied to your personal name. So there's no trace back to yourself, which I always thought that's very interesting. I'm still digging into it, but I'm like, I'm wondering why that would be important, because your other businesses are all tied to you. So why having that other third party that's not tied to you? Why is that important? So I don't, that's a good question. I'm still learning that part. So we'll have to have another one of these after I finish learning, and we'll have to dive into it more.
Yeah. It's quite interesting. Yeah. So then the other question is, okay, so talk about the importance of having more than one business bank account. I kind of diversify. I try to avoid concentration risk, but
Yes.
talk to the business owners about that.
Yep. So each of my businesses have at least 4 different bank accounts, and that's not credit cards. So I have credit cards for my other businesses too, but I have 4 different ones, and I have an expense account, an income account, an investment or an emergency fund account, and then a tax account. And I funnel money through each one of those accounts. And then I only have the expense account is the only one that's tied to any kind of checks or debit cards. It's the only one I have. The rest of them are savings accounts. I typically like to put them in high yield savings accounts. And then that way I'm earning interest on all 3 of those accounts as they sit, for my emergency fund or for my taxes or whatnot. And my income goes straight into there, and it just kind of sits and earns money and works for me passively. I mean, it's not much, right? Like, what is it? Yeah, my account has a 4% on it, so it's not very much, a few $100 maybe a month is what I get in there, but it's, it works for me. But it's important too, because then I know it seems like a lot more work, accounting wise, because you have to track all those different accounts, but really it's broken down into specific categories accounting wise. Income is income and expenses are expenses and taxes are taxes, and then you just have a savings account. So it just makes it so much easier.
Yeah. I think what you're describing is this great book called For Profit First. And it's basically talking about what you're describing is basically when
there's quite a few books out like that. That's a good book.
Yeah. So it sounds like, you've read it. That'll be in the link in the show notes. Yeah.
That's a good one. And cash flow is another good one. And it kind of touches a little bit on that in cash flow. Robert Kiyosaki.
Okay. I love Robert's stuff, and that's how I got my financial freedom journey. You talk about what are some ways a business owner can become more profitable. So describe that.
Oh man, that's a good one. So again, it kind of ties back to watching your profit and loss, right? If you are overspending and you're a small company, right? A lot of small companies tend to go after their software, right? They have to have their CRM that costs a few $100s, a year or whatever. They're using subscriptions like getting Adobe, Canva, Illustrator. Marketing expenses. A lot of entrepreneurs will go and buy ads, Google ads, Facebook ads, all that stuff. And until you're really bringing in income, and I mean good income, $5,000 to $10,000 a month, I always tell people watch your spending. Spend as little as you humanly possibly can, and that way you can build to that profit and compound it month after month after month, and you're putting a certain percentage of it into your, the emergency fund account that you set up, and you're just stockpiling it. And then that way next year or the year after, or however many years, I usually say 2 years typically, in 2 years, then you can just go hard and get all those marketing ads out there. And that's just going to build your profit up more and more and more. And it's just going to be this domino effect, you know?
Yeah, I love that. Really kind of bootstrap it. And in most entrepreneurs I've been talking to, they basically said, watch your expenses, especially in bear markets, downturns. That's kind of how much you spend is kind of indicative of how long you'll survive. It's very interesting.
Yeah, absolutely. I agree with you.
Yeah, really interesting. I really enjoyed talking. There's other questions but one thing is having a bookkeeper for real estate. So, and differences between a bookkeeper and a property manager.
Yeah. Oh yeah, that's a good one. So I have a lot of clients that have investment properties as real estate agents themselves. They'll have probably 9, 10, 15 properties themselves, and they'll have a property manager, But they're always asking me like, well, if I have my property manager who is making sure the property's cleaned, making sure any fixes need to be fixed on it, and then they're tracking all the income on it, what is the point of having you? And it's always a good question, because before they got that property manager, I guarantee they rehabbed that entire property. They also had the entire purchase of the property that they need to count as an asset that they have a scheduled depreciation on, right? So that it'll help their taxes at the end of the year. And then on top of that, I'm making sure that your bank account is set up for you. So I'm reconciling everything. I'm making sure to catch anything that's not there, that you didn't know was there or whatnot. It's not just that I'm tracking your property, I'm tracking your business. So you have those properties, but I guarantee you're spending money outside of those properties too, that you're going to want to write off at the end of the year. So it is important to have both the property manager and the bookkeeper. Most of the time, I have a relationship with your property manager, and so we'll work together to make sure everything's cohesive for your business.
I really enjoyed this talk. How can people contact you, follow you, reach out to you on social media, etc.?
Yeah, so my website is Olive Branch. You go on there, you can schedule a meeting. We have free consultations. They're an hour long, so we can talk about your business. You can ask me any kind of questions that maybe, even if you're not ready to be a client yet, right? Like that might scare you first off, right? But if you want to talk to me and kind of pick my brain and see what we can, tweak for your business, feel free to call me. We'll set something up and I can help you out. And then we're on Facebook as well. Olive Branch Bookkeeping Inc. is my Facebook. You can reach out to me. And then we are releasing blogs currently on my website, and on YouTube, we'll have videos up soon too.
Awesome. And for all the audience out there, let's thank Caryn for coming onto the show and dropping nuggets of wisdom. And all of her resources will be in the links and show notes. And thanks so much for coming onto the podcast.
Thanks for having me.